Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news the bumpy road to recovery is getting stressed in Australia. In Melbourne, health authorities and Victoria's Cabinet were in crisis meetings last night regarding whether to impose a new lockdown as they race to contain a ballooning coronavirus outbreak. A new full lockdown is the likely result, throwing the pandemic recovery there into reverse. In the US, mortgage applications fell there again last week, a decrease that was larger than the usual small gains and drops over the past few months. Bond yields slipped slightly in the US as investors piled into a big $73 billion 5-year US Treasury bond auction, offering $152 billion for the $61 billion that the US Fed didn't take. The median yield was 0.74%, which was lower than the 0.8% achieved at the prior equivalent event. In China, Beijing seems to be digging in its efforts to clean up their debt market exposures. Defaults of Chinese onshore bonds reached 61 billion yuan in the March quarter, up 18% from the same period last year. And now earlier signals that it will allow defaults amongst China's heavily indebted local government financing vehicles for the first time is causing jitters in financial markets. Bond yields are rising, except for Beijing's own issues. Basically, China is struggling to suppress its bubbles in an economy awash with money and debt. Inflation is also getting the attention of the senior Beijing leadership, with more promises of action to stem the rising level of producer prices. There is some impact in the past few days for commodities like iron ore and coal, but prices are only back to where they were a week or so ago. But for food commodities, that impact is yet to be seen, especially for corn, soybean and rice. Maybe the weather has something to do with it. This time last year we were reporting major flooding in China, and the damage then was quite significant, certainly more than they're used to in their rainy season. The rains are back this year, and early signs suggest they could be in for another extra heavy flood season. The US Treasury 10-year yield starts today 2 basis points higher at 1.58%, and the price of gold starts today down to $1,893 an ounce, a dip of $6 today. And oil prices start today marginally firmer at just over $66 a barrel in the US, while the international Brent price is just over $68.50 a barrel. And the Kiwi dollar opens today a half a cent firmer at 72.8 US cents and pushed up after the RBN suggested the OCR may be raised sooner than previously indicated. Against the Australian dollar, we're up to 94.1 Australian cents, and against the euro, we're up to 59.8 euro cents. That means our trade-weighted index starts today at 74.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.